The earnings season is on. Among Nifty 50 companies, we have Infosys, Bajaj Auto, HDFC Life Insurance that are expected to report their fourth quarter numbers today. Let's start with Infosys. India's second largest IT company is likely to witness a revenue decline for the second quarter in a row, while margins and profits are expected to increase marginally, aided by operational efficiencies and lower on-site expenses. Revenue is expected to decline by about 0.5% quarter on quarter in constant currency terms, and it's expected to come in at around 38,640 crore versus 38,821 crore in the previous quarter. Infosys's profit after tax, which is PAT, is likely to go up by over 1% sequentially to 6,180 crore from 6,113 crore earlier. Margins are seen growing up by a modest 20 basis points, coming in at 20.7% in the quarter under review, and EBIT, which is earnings before interest and tax, that is seen coming in at 7,995 crore, which is about 0.43% higher from the previous quarter. I mean, there are multiple things that we'll also need to watch out for in the Infosys number. The numbers, of course, I think broadly most of us are expecting them to be muted, but the guidance that Infosys will give for the financial year 2025 will be closely tracked by investors and analysts, as it would set the tone for the entire fiscal. Most brokerages are expecting Infosys to maintain its revenue growth guidance in the range of 2 to 7% for financial year 2025. They also expect Infosys to maintain its operating margin guidance for the current fiscal in the range of 20 to 22%. The IT giants hiring in the last quarter and the plans for current fiscal year will also be keenly tracked, given the decline in net headcount for the fourth straight quarter in the October to December period. Remember, the company had also announced a hiring freeze at campuses last year. Other parameters that the street is likely to track will include Infosys's outlook on spending and discretionary demand, its artificial intelligence deal pipelines, as well as announcements related to buyback or special dividends. Akshay, I'll come to you now. Infosys is in a bit of a rough patch. I mean, it has been in a rough patch since early February, has declined about 20% from its peak, and on Tuesday it was a top loser among Nifty 50 stocks. It is in oversold territory, Akshay. RSI is below 30 now. So do you see a pullback if the results are good? And also, what if they are bad? How much more can the stock correct from here on?
Yes, you rightly mentioned Infosys is in a rough patch. In fact, from 1720, the sell-off has been more of a one-way declining trend right up till 1420 odd levels where we closed on Friday. And if you look at the broader trading parameters still in the futures and option segment, there is a lot of short positioning which I see is Infosys. Today, the start has been a bit better considering the fact that results are there. So there's a bit of short covering as I see. Now the question is, will there be a pullback or will the slide would continue? Technically, still it's a weak trend. Yes, as you rightly mentioned, the RSI is below 30. There are signals that oversold parameters may eventually give way to a slight bounce back theory. But considering the given parameters right now, even if there is a bounce back, it has to be a mild recovery. So right now, considering oversold parameters, my expectation in Infosys that it might be confined in a range where the upper end of the range at the best can work out to 1480 on good set of numbers, or even some bit of a positive news flow post the result front. Now, if the results don't go as per expectation, then where do you see Infosys? Technically, the strong support is placed at 1360. So that's a very strong value area on the price charts. And my sense is that if in case those levels are hit, that would be a screaming buy for Infosys, because those are good trading parameters where you can consider taking a buy point. So the sense is a moderately bullish view in Infosys. Expect some bit of pullback from current levels. 1480 is the best case scenario you can look at on the upside from a short-term trading perspective, and on the worst case downside, 1360 would be the level to buy on dip in case the post results the stock offers you that opportunity.